Sound check, everyone. Just let me know it sounds well, and we'll get started here in just a couple minutes. About 2 minutes, we'll get going here. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we get into tonight's video, let's just review a little bit about what went on yesterday. It was another, I would call, a lackluster day, even though markets started off a little weaker and mixed early on, but we did get some traction. We saw some new highs again today, and I can't get the meme out of my head. Stocks only go up. So that appears to be what's going on here. But as we are going through the markets this week, I think we're going to start to see a bit more volatility. Tomorrow as we come in, we've got CPI, but before getting into that, I want to talk about the S&P is up 0.4, NASDAQ up 0.2, and the Russell up 0.1. And it's interesting because the S&P has taken over the leadership this year. It's up 16.7% on the year. NASDAQ up 14.3 and the Russell up 14.3. So I talked about this probably last week sometime about these markets normalizing, and we're continuing to see that happen as far as we unfold here. And I'm going to show you a couple of charts here shortly what the leadership looks like in the S&P. But yesterday, also from a sector viewpoint, financials were up 1.0, communications up 0.9. We saw real estate crawl back up 0.9. Really, we're just seeing a rotation here on a sector by sector basis. We're not really seeing some major traction. And our database, as I'll talk about here in a few minutes, actually saw a little bit of negative rotation, but nothing material anyway. But as we come into Tuesday, it's going to be about the bank stocks and CPI. And I mentioned in last night's video that I thought maybe we're going to come back into this inflation trade again. We saw a slight uptick on the 10-year, nothing really material there. It finished at 1.36, so nothing there. But it's going to be about the bank stocks, and they're expected to have blowout numbers. So if they miss, then that could be a problem. Otherwise, we're likely to see the continuation of this market moving higher. But as just looking at a couple notes here that I have to myself, as the banks that are going to be coming out tomorrow, J.P. Morgan, Goldman, and then we have First Republic, but the big ones are Goldman and J.P. Morgan. I don't really, like I said, I don't know that they're going to blow out numbers or there's going to be a miss, but that is going to be dominating some of the market sentiment tomorrow. I want to make a quick mention before we get into this. I think that I want you folks to submit some stocks. I'm going to do 6 stocks on Wednesday night. We'll do a little bit of interactivity on Wednesday nights. So instead of doing the long live stream I used to do midday, we're still going to go to this 9 o'clock hour on the East Coast to do this stuff. But really, as we go forward here, there's really not a lot going on except for the CPI and the bank. CPI is expected to come in at 0.7. That comes in a little hotter. Maybe we'll see an uptick on the 10-year. Maybe there'll be some rotation that starts to happen in some of these sectors, but we'll have to wait and see on that. Let's go ahead and take a look at some of the database output that we had in tonight's run. And just as I zoom in on this, you're going to see that the daily models had 571 buy signals. There were 159 sells, basically a 5-to-2 buy. I said there was a negative ratio. It's actually slightly positive. We're at 48.07%. That's out of 16,406 on the total amount of symbols in the database right now. The one thing I do want to point out here, we look down below here where my cursor is, we only have 4 sectors right now that are long. And those are conglomerates, healthcare, services, and technology. And most of those are fairly new entries. The newest one is the conglomerates, only been long for 5 days. So what I'm looking for here, now that we've got the database over 42%, what I'm looking for here is a move for the sectors to start to get some traction. And right now, as I mentioned, we only have 4 of the 11 sectors that are long. So we're likely to see some more come in, and I'm looking for that rotation. There were no new buy signals from a sector viewpoint today. One thing I want to mention just for the WaveTech subscribers here, we did release our latest screens out there, so those are available to you right now. We have a number of screens out there. Just want to make sure you knew that. This is a good time to communicate to a lot of you. And then you can see the screens in the spreadsheet and all those type of things. So if you're a subscriber, you can get that stuff. I just wanted to mention that. We have some interesting things that we're going to be working on this stuff as we go forward. So the first market that I'm going to cover tonight is the S&P 500 and the futures. We're seeing just down 25 cents, very quiet, 13,000 contracts traded overnight, nothing really going on there. As I've been talking about over the past several days, I continue to see this thing climbing this 10-period moving average. As I bring in the market grid for today, we're looking at probably an S1, R1, possibility of going R2. We could print the 4,400 level today. This goes back probably 2 months ago when we first started to get projections around 4,400, and we just did this creepy crawler you can see on the screen here. We continue to hold a long position in the models on both on the SPY and the futures. So we're seeing some slight acceleration. You'll notice down on the PPMs down here below, PPM 3 is turning up a little bit, which is the final confirmation of the trend as we go forward. But the market grid looks very solid. S1, R2 for today. As we go into the SPX, what you'll see here is that the same thing. We've got a 0.24 on PPM1, a 0.16, and a 0.16 on PPM3. So 2 and 3 have the same value. And I talk about this angle of attack all the time. This slope is very positive. The 10 period moving average 43.32. That's rock solid support. It's quite a bit below where we are right now. It is rising right now at about 10 handles per day. So just in a couple of days, we'll be trading around 43.50, 43.60. So this support is chasing the markets right now, which tells us that there's a very small probability of the markets going below that level. We also have PPM1 at that 0.24, which suggests there's only a 40% probability in this kind of configuration to penetrate and to signal any kind of reversal pattern. So it's very small probabilities at this time right now. The next market that I'll cover is the NASDAQ. NASDAQ's up 7 handles right now. As I've been talking about, it's the same scenario in all these markets. We're getting these climbing this 10 period moving average, and we're just not deviating at all. And the PPMs are right at trend level on the NASDAQ, 0.21 on PPM1. Put a cursor over here on this side, 0.25 and 0.29. So we have great angles of attack. There's perfect trends going in play right now. We should continue to climb along this line. As we look at the market grid for today, 10 period moving average 14,735, low 14,868. We're quite a bit above that. Look for S1, R2, and I think there's a possibility here in the next couple of days we're going to see a 15,000 print on this market. I don't see this earnings season coming in and actually having a negative impact. They typically are positive most of the time, and especially in this environment we're in now and the year-over-year numbers. We look back last year, we were dead into the pandemic and a lot of metrics out there that are going to continue to look good as we go forward. The next market I'll cover is the Russell, and the Russell continues to be a little bit weaker. We were able to see a slight uptick yesterday. This is the cash Russell. We still need to get above the numbers that I talked about yesterday. 2298, 2280, those are key numbers. We had a high yesterday, 2283. We closed at 81. So we're getting right to those minimum levels. But if we can get above basically 2300, we're going to start to see some acceleration. Right now, PPM1 is at a negative position, minus 0.23. So that suggests that the 10 period moving average 2289, just above where we're trading on the cash right now, is going to be resistance. Probably take a couple more days of sideways before we'll be in a position to get above that level. Now, I mentioned in the opening comments that the spreads that we are looking at here, the first spread I have over here on the far left is the S&P versus the Russell. I'll bring that up full screen. You can see it's just continuing to outperform. This is a weekly outlook from, but you can see we're breaking out on the spread, starting to move higher. So it looks like the S&P is taking control. All this time we've seen the NASDAQ take control over that level. And we are seeing this is the inverse. If I were to flip this chart, you would see the NASDAQ is also leading substantially as well. But just because of the fact that we are up 16.7% on the S&P and the Russell up 14.3, we've seen this thing completely reverse. Early in the year, the Russell was up around 18 plus, and NASDAQ up 2, and the S&P up around 8 or 9. So there's been a lot of overperformance here, both the S&P and the NASDAQ. And if you think about it, the components that are in the S&P, there are similar components. The top end has got Apple and some of the big tech stocks, obviously. So that's helping the S&P to outperform here. I think this could be an impact. So the next market I'll cover is I want to talk about the 10-year treasuries. And we're seeing this starting to turn up a little bit. I mentioned in last night's video, we have a fair amount of resistance right at the 1.40 level. We're finished at 1.63. It'll be interesting because I think it'll be fairly easy if we can get above 1.4 to move to 1.45. That should be the cap on this at this time. I don't see us getting below this 200-day moving average down here at 1.24. We'll call it 1.25. We printed 1.26 the other day. I just don't see us getting under that. We should see the treasuries continue to move up. And one thing I want to go through real quick here is the yield curve. And I talked a lot about this. The reason why the treasuries have moved up so much and yields declined is because the Fed has been focusing all their purchases in this 5 and 10-year areas, which has pushed these yields down. And you can see here on both of these charts here is a flattening yield curve. And I think they're just resetting things. Overall, they want to keep the yield curve fairly steep, but not too steep. So they backed it off a little bit, and now they have the room to let some things in the free market actually take over again. So this is all being, you can call it manipulated, you can call it whatever you want, but it's basically being engineered to look like it is, and this is exactly what they wanted. If you went back to last year's video in March and April, I told you we wouldn't go negative. From a real rate viewpoint, we are negative, but from a actual numerical yield, we never went negative. And I also told you that we would see a steepening yield curve, and that's what we've had. So now they're just managing the yield curve. It maybe got a little bit out of hand, especially when the 10-year was up at 1.7. So I'm going to cover two more markets tonight. The next market is going to be crude oil. I think crude will continue to be in play here. We're seeing this angle of attack where if we look at the daily charts, we're up 0.35, 74.36. I believe we'll print through this high that we printed the other day at 76.98, call it 77. We'll ultimately get through this. There's some more consolidation that looks like it's necessary to occur here, but we should see this thing start to uptick a little bit. These PPMs should start to accelerate, but the real story is being told here on the weekly chart, which is at the 10-period moving average here is the 70.39 level. So that's going to be your strong support right here, that demand line that I talk a lot about. Got PPM1 at a 1.40, less than a 10% probability to drop under 70.39. And that number is moving up roughly about $1 per week right now. So this is going to be 71, 72 here in the next couple of weeks. So there's very solid support under this market. We look at the PPMs across the board as far as the angle of attack and the trends go. Everything's very strong and very robust. I don't see this thing breaking down, and that would be the extreme, would be that 70.39. I don't think we get anywhere close to that level. The final market that I will cover tonight is gold. Goes up 240. We're hanging right around that 1808. I've been talking about these numbers. Let me go over the daily chart before we. We did get a buy signal at 1808 yesterday, so this is going to be interesting to watch. The last signal we had on this model, we sold at 1879. We just got a buy back in here at the 1808 level. This is looking like we're going to challenge up at the 40 and the 200-day moving average. That's 1835 to 1840. Been talking about these numbers for a few days. I think there's a few more days of consolidation, and it's going to be important that the day that this buy signal came out, that 1791 level will be the pivot number in this pattern. So we need to hold that. But what we're seeing on the PPMs, just looking at, is hard acceleration here. 0.25 on PPM1, you see it's turning up over here, and that is very, very bullish. PPM2 is crossed to its first, second derivatives, and PPM3 has also is not positive yet, but it won't take much to turn that up. We're going to have to get above that 40 period, above that 1840 level, really, to get that to kick in. But typically what happens in this pattern, you'll see the PPM 1 and 2 turn up, will move up into that average where it is flat, which is the 40, which is that 1841 level. I'll take a quick glance at the weekly chart. Very similar numbers. 1828, 1834 is the 40-week and the 10-week moving average. They are actually, the PPM2 is turning up. That's positive. PPM1 is down, but it's not in a trend mode down, so it's very neutral. And I talked about this the other day, is that my expectation is that we'll trade between that 1792. I just mentioned 1791 was the low of the day that we got that buy signal. That'll be your critical pivot, but we should stay right between the 1792, 1828, 1834 levels. So folks, thanks for watching. These live streams are pretty cool to do, I think. We're still getting some pretty good traction. Make sure you like and hit that notification bell so you know when I come live. And, you know, I'm going to keep doing this until you folks tell me not to do it this way. And so make sure you subscribe if you haven't, if this is the first time you're here. We'll talk to you tomorrow night. And remember, give me some stocks so that I'll cover 6 stocks. I'll pick 6 stocks on Wednesday night and cover that as well. Thanks for watching, everyone.